Greetings children. Welcome to my channel XI Accountancy by Shakun. Accounting made easy for you all. Today we'll be talking about Bank Reconciliation Statement, which is Chapter 12 of T.S. Grewal. In this video we'll be talking about the meaning of reconciliation, the meaning of Bank Reconciliation Statement, the need or the importance of Bank Reconciliation Statement, and the reasons of differences between the cash book and the passbook. So let's first talk about the meaning of Bank Reconciliation Statement. Before we move on to the topic, I would like you all to have a look at the picture that you can see on the screen. When you look at the picture, it looks almost the same. But when you look at it deeply or intricately, then you can find out that there are some differences that are there between these two pictures. These are the differences that I could find between these two pictures. Now, before I link this with the current topic, you should know that when we prepare books in our business, in the business we prepare the cash book, the bank column as well as the cash column obviously, and in the bank they prepare the passbook. Just as you looked at the picture and you could spot some differences between picture 1 and picture 2, similarly the balances which are shown as per cash book and the balances which are shown by the bank as per passbook are also different. Normally the balances should be same, they should agree, but it does not happen. There are differences in the balance between the bank passbook as well as the bank column of the cash book. Let's understand this with the help of few examples also. Okay, so what is bank passbook? When we talk about the bank passbook, it is nothing but it is a record of the customer that is kept by the bank. Bank, as you all know, is a financial intermediary and it is related with or it is concerned with lending money and crediting people, having deposits, etc. So the book that is maintained by the banker, which records the customer's account as it appears in the ledger, is known as bank passbook. So every business has an account with the bank, and the business's account that is maintained by the bank as a part of the ledger is referred to as bank passbook. So from our bank passbook, we can have a look or peep into the debits and the credits that the bank has made in our respective account. Now, if we talk about the business prepares the cash book. Now, what is cash book? Cash book is a part of recording of the transactions in the books of accounts. It is a simple accounting book which is used to enter basic data about cash receipts as well as cash payments. So basically, a cash book is cash account and bank account prepared together by the business, which tells us about the balance of cash and the balance of bank. Now, ideally, the balance that as a business my cash book shows and the balance that my bank shows should be same. So when cash book and passbook balances, then what happens? As you can see here, in accounting, we prepare our books of accounts and we prepare our cash book. Cash book gives us some balance as per bank. Similarly, in the bank people prepare the bank statement which is reflected through the passbook. And from the passbook also we have a balance as per bank. So ideally the balance as per the cash book and the balance as per passbook should always balance. It should be equal. There should be equality sign between two. If there is equality sign between the two, then we don't need to worry because all the transactions that are recorded in the cash book are also recorded in the passbook. So nothing to worry because the balance is tallying. But when the cash book and passbook does not match, how does that happen? Same process. In business, we prepare the cash book, we get a specific balance. The bank also prepares the passbook and we get a specific balance. Now, if the balance does not tally, if the equality sign does not hold true, suppose we have balance as per cash book as 20,000 and balance as per passbook as 30,000, that means the balance does not agree. The equality sign does not hold true. In case of such difference, we need to prepare a bank reconciliation statement to reconcile the balances as per cash book and as per passbook. Moving on. What is bank reconciliation? A bank reconciliation is basically the process of matching the balances in the business records to the bank records. So as you know that the business prepares the cash book and the bank prepares the passbook. So what is bank reconciliation? Bank reconciliation means that we need to reconcile the balances of cash book as well as passbook so that they match, so that there is an equality sign between the two. The goal is to find out the differences between the two. That is the business records versus the bank records. Business records means the cash book balance and bank records means the passbook balance. And making changes to business records as appropriate. See, we cannot change the passbook. So that means if there is some error between cash book and passbook, we need to change our cash book balances in order to match them with the passbook. Because ultimately the balances should be equal. Moving on, now let's talk about the meaning of bank reconciliation statement. Bank reconciliation statement, it means that where the cash book balance and the passbook balance does not tally, in that situation, we need to prepare the bank reconciliation statement. So whenever the cash book and passbook balance does not tally, then the B.R.S is prepared to reconcile. Reconcile means to match the balances of the cash book and passbook. So in order to match the balances, B.R.S is prepared. It is a statement which is prepared. So what is the definition of bank reconciliation statement? It is a statement which is prepared by the account holder on a particular date. Very important, it is always prepared on a particular date to reconcile. Reconcile means to match the bank balance as per cash book with the bank balance as per passbook, showing entries because of which the differences between the balance exist. See, if the cash book balance and the passbook balance does not tally, there has to be certain reasons for the same. So we need to find out those reasons. We need to find out those causes for the difference, and those causes should be mentioned in the bank reconciliation statement that is prepared to reconcile the balances between the cash book and the passbook. I hope it is clear that what bank reconciliation statement means. Also, you must always remember that what is debit for the business will be credit for the bank and vice versa. So if in a business, when we prepare the cash book, on the debit side we record all the receipts, means whenever cash is coming in, we record it on the debit side. But in the bank, when bank prepares our ledger account, when the bank prepares our ledger account, whenever cash is coming in the bank, our ledger account is credited. Okay. So in case of business, in case of cash book, the debit side means plus, but in case of bank, the credit side means plus, and it is always vice versa. So moving on, what is the need of bank reconciliation statement? Why do we prepare the bank reconciliation statement? So let's talk about that. The bank reconciliation statement is prepared because of some reasons. These are, first is brings out the errors. So bank reconciliation statement brings out the errors, if any, which may be committed either in the cash book by the business or in the bank statement or passbook by the banker. So there may be some errors which may be committed by the accountant of our business or by the banker. So those errors are always brought forward. They can be reconciled. The next point for need is delay in clearance of checks is known. Now, if there is any undue delay in the clearance of the checks which have been deposited in the bank, then that can be known from the reconciliation. By preparing the bank reconciliation statement, we will come to know that if there are any checks that have been deposited in the bank, but they are taking undue time to get cleared. Okay. Next is discourages embezzlement. Now, if we prepare the bank reconciliation statement regularly, then any kinds of frauds or embezzlements or manipulations that can be discouraged. Next point is verifying the accuracy of cash book. Now, the bank reconciliation statement, if prepared regularly, it helps us in verifying the accuracy of the entries that have been recorded in the cash book. So, there are various entries that have been recorded in the cash book. Their accuracy can be checked whether they are correct or not. That can be checked by reconciling the balance of cash book with that of passbook. The next point is shows the actual bank balance. So after we reconcile the balances of cash book and passbook, we come to know about what our actual bank balance is. Otherwise, when the bank balance as per cash book and the bank balance as per passbook does not tally, we will be in a fix. We will not know that what is the amount of actual balance that we have. So in order to know about the actual balance, the businesses, they prepare the bank reconciliation statement. So this was about the need of bank reconciliation statement. Now let's talk about the various reasons for the difference between the cash book and the passbook. As we've already discussed, the cash book and passbook balances do not agree. Then what are the reasons for the same? So the reasons for difference between the balance of cash book and passbook are: the first is difference due to timing. Now what happens is that there is always a time gap between the recording of a transaction in the books of accounts. In the books of accounts, that means the cash book, and the same transaction being recorded by the bank. So whenever we issue a check, for example, as soon as I, as a business, in my business, if I am a proprietor, as soon as I issue a check, I record that in my books of accounts. In my cash book, I record it as a payment. But the same check will be recorded in the bank only when the customer to whom I have given that check, when that person will take it to the bank, when that person will present it to the bank, only then my bank account will reduce. So when I issue a check, as per me, as per my books of accounts, my cash book shows a credit balance. Why? Because I'm making a payment. So according to me, my balance is reduced. But the balance from the bank will be reduced only when the customer goes to the bank and presents the check. Only then my bank account in the bank as per passbook will be reduced. So that's the first reason, that is difference due to timing of recording of the transactions in the cash book as well as passbook. The second point of difference is the transactions recorded by the bank. Now, sometimes what happens is there are a lot of transactions which are recorded by the bank, but the business people, they do not have any idea about recording the same. So sometimes the transactions are recorded by the bank which become known to the business, known to the account holder only after the person receives the bank statement. So only after a business receives the passbook does we come to know that there are some transactions which we have not recorded but the bank people have recorded. For example, any kind of interest that is credited by the bank, or maybe interest on overdraft that is debited by the bank, charged by the bank, those kind of things we do not have as a business any idea about what is the actual amount of interest charged or debited. So that can be known only when the passbook comes to us. Now, the third reason for difference is errors. Now, there may be various errors that may be committed by the bank or by the account holder. Account holder means the business. So, various errors may be committed by the bank people or the business, and these errors, they may result in the difference between the balances of cash book and the bank statement or the passbook. For example, a wrong balance may be carried forward. A transaction may not have been recorded in the cash book, or maybe amount of a transaction may have been wrongly recorded in an account. Maybe there was a check of 10,000 which was issued in favor of somebody. So obviously the bank people will deduct 10,000, but by mistake we recorded it as 1,000. So in that case, obviously the bank passbook and the cash book will not tally, because different amounts are mentioned. So let's talk about, let's take few examples of all these reasons for the difference. Let's talk about the first one, difference due to timing. So there are few transactions that I have taken, which I'll be explaining to you. So difference due to timing. Timing means the recording of the transactions. Let's take the first example. Checks issued but not yet presented for payment. Please understand, checks issued. When I say checks issued, it means who has issued the checks? The business has issued the check. So whenever the business issues a check, what happens is cash book is decreased. Why cash book is decreased? Because we are issuing a check in favor of somebody. So obviously cash book will be decreased since it's a payment. But not yet presented for payment. That means whosoever XYZ to whom we gave the check has not gone to the bank and presented the check. Not yet been presented for payment. That person has not gone to the bank to present the check. Okay. So let's take an example for the same. A check of 20,000 is issued on 27th of March 2019. A check has been issued. Whenever you read the word check has been issued, you should know that our cash book is decreased. It was issued on 27th of March, which is presented to the bank on 2nd of April. Okay. What was the main transaction? Not yet been presented. Okay. But here it is written, it is presented. But it is presented on which date? On 2nd of April. So we will be preparing the bank reconciliation statement when? On 31st of March, close of the accounting year. So on 27th, our cash book decreased. But on 31st, when we were trying to reconcile the balances, on this date, the check was not presented to the bank. Since the check was not presented, that means checks have been issued, have been recorded in the cash book, but they have not been presented for payment. So because of this, there will be a difference between the cash book and the passbook, because this transaction has been recorded in cash book but has not been recorded in the passbook. Let's take another example. Checks deposited into the bank but not yet cleared. Okay, so checks deposited, whenever you read the word deposited, it means you, the business, has deposited some checks into the bank. So whenever I as a business would record some checks, would deposit some checks into the bank, so obviously I will feel that I've received those checks, I've deposited into the bank, so my cash book will increase. I will record this transaction on the debit side in my cash book. So they have been deposited into the bank but not yet cleared. When we deposit a check into the bank also has to clear that check and credit that amount into your account. Okay. So from business point of view, the check has been deposited, so cash book has been increased. But from bank point of view, it was not cleared. So passbook is at the same level. Passbook is at the same level, but the cash book has increased. So this will lead to a difference between the cash book and the passbook. Let's take an example for this as well. A check of 10,000 is deposited into the bank on 30th of March. So it was deposited into the bank. So obviously your your cash book will increase since it was deposited into the bank on 30th of March, which is collected by the bank on 4th of April. Dates are very important here. Obviously, we'll be comparing it with 31st of March. Till 31st of March, this check was not collected. Why? Because it was collected on the 4th of April. So on 31st, if we look at the status, the check was not collected. So that means cash book is increased, but the passbook is at the same level. So reason for the difference between cash book and passbook. The second type of reason was the transactions recorded by the bank. So let's take few examples for this one as well. Interest credited by the bank but not recorded in cash book. Interest credited by the bank but not recorded. Credited by the bank means, I told you that bank credits our account means bank increases, gives us some interest. This is interest which is received by us. Okay, interest allowed by the bank, received by us or allowed by the bank. Interest credited means the interest which is allowed by the bank. So when the bank allows us interest, our passbook increases. They have already recorded it into the passbook, but it has not been recorded in the cash book. That means cash book is at the same level. We did not have any information about such interest. So reason for the difference. Another example for the same thing. I am giving you the general thing also and the example also. So bank statement shows a credit of 2500 for interest. Bank statement shows, that means passbook may record hua. So passbook is greater, but we didn't have, whether it's written here or not written here, obviously baat hai that if the bank has recorded, that means we have not recorded such interest. These transactions such as interest etc., they are recorded by the bank. They are not recorded by the cash in the cash book. So cash book is at the same level. Another example, bank charges or interest charged by the bank not recorded in the cash book. Now, bank may also charge certain charges for the services provided. They may also charge interest on any kind of loan. Such interest is charged by the bank. Charged by the bank means it is deducted by the bank. So, our passbook is lesser as per the bank records, but it has not been recorded in the cash book. That means our cash book is at the same level. So again there is a difference between the cash book and passbook. Next, interest and dividend collected by the bank. Now sometimes what happens is that the business people, they give standing instructions to the bank to collect certain interest on investments or dividends on shares. So such interest and dividend collected by the bank on our behalf would increase the passbook. When the bank has collected on our behalf, they will increase our bank account. But we did not have any idea whether these things have been collected or not. So our cash book is at the same level. Hence the reason for the difference between the cash book and the passbook. Another example, direct payments by the bank. And again, there might be a standing instruction given to the bank to make certain direct payments. For example, a payment for insurance premium, or a higher purchase payment of 950 made by a standing order was not entered in the cash book. So we may instruct the bank to make certain payments on behalf of the business. Such payments, when made by the bank, they are shown in the passbook. So passbook is decreased. But we did not know when the payment was made. So cash book is at the same level. So hence the reason for the difference between the two. Another example for the same reason, the transactions which are recorded by the bank. Another example is direct deposit into bank by a customer. So there might be a possibility when a customer directly deposits the check or money into the bank. For example, Ramesh, a debtor, deposited a check of 8,000 directly in the bank. So when a customer directly deposits the money into the bank, obviously the passbook will increase. We did not have any idea about the customer going directly to the bank. So cash book is at the same level. Hence the reason for the difference. Another example is dishonor of a bill discounted with the bank. So there might be a situation where a bill has been discounted with the bank. A bill receivable may be discounted with the bank, means that maybe a bill had to be received after 3 months, but we are in need of money and we give the bill to the bank and take the money from the bank after the bank deducts certain discounting charges. So that discounted bill may be dishonored after 3 months when the bank wants to, take that money from that person who had to give us. There might be a possibility that the bill is dishonored. For example, it will be clear with the help of an example. A bills receivable of 1040 previously discounted. पहले से हमने उसको discount किया था with the bank and the discount charges are 40 with the bank has been dishonored now. But advice was received on 3rd of April. We did not know about the dishonor. We came to know about the dishonor on 3rd of April. I'll explain this with the help of journal entries. When we receive a check, when the bills receivable was created, that time, bills receivable account would have been debited, okay, and the person, any person, let's say Ram's account would have been credited, okay. So Ram, our debtor, has been written off and he has been converted into bills receivable, okay. This bill we discounted with the bank. When we discounted, we got the money, cash or bank account debit. Bank charged certain discounting charges, discount account debit to bills receivable, which is going out from our business. Okay, so these entries we would have passed. Now the bill stands dishonored. You know, at the time of dishonor we have to pass a reverse entry. So now at the time of dishonor, what happens is, I had to receive from Ram, but I gave that check to the bank and took money from the bank. Now I am liable to make payment to the bank, and Ram will again become my debtor because the bill is dishonored because of some reasons. So Ram to bank. So according to this entry, we should know that when the bill becomes dishonored, bank should decrease. Okay. So when the bill became dishonored, the passbook would have decreased, but the cash book was at the same level. Because of this reason, there is a difference between the cash book and the passbook. The next example is bills collected by the bank on behalf of the customer. The customer may give a standing advice to collect certain bills receivable on behalf of the business. At that time, what happens is the bank is collecting the bills, so passbook is increasing. But we don't know when and on which dates the bills have been collected. So cash book is at the same level. So therefore, the difference between the cash book and the passbook. Now we come to the last reason, which was the errors. The reasons for the difference was error. So there might be certain possibilities that there may be some errors and omissions. Some errors and omissions, such as a check collected on behalf of Mohan is entered in the account of Mahesh. So what happens is, we collected a check on behalf of Mohan, but we entered it in the account of Mahesh. So according to us, when we gave the check to the bank, the passbook would be increased because on the check Mohan's name was written. So obviously in the passbook our amount is increased, but we entered it in the account of Mahesh. So obviously the cash book is at the same level. So this is one of the error that's performed by the cash book. The same error may be done by the bank people also. A check may be deposited into the bank, and the bank, instead of crediting our account, credited somebody else's account. Again, there may be a reason for the difference between the cash book and the passbook. So these are the different errors, reasons for the difference between the cash book and the passbook. We have also taken certain examples on the basis of which. Now, how these errors, how these differences due to timing, how these transactions only recorded by the bank, how can they be rectified? We only talked about the problems. We only talked about that what can be the reasons for the difference. Now, how these differences can be reconciled? These differences can be reconciled by preparing a bank reconciliation statement. So by preparing the bank reconciliation statement, the balance as per cash book and the balance as per passbook reconciles. Okay, so these errors can be removed by reconciling the balances. So let's recapitulate. In this video, we have talked about the meaning of reconciliation, the meaning of bank reconciliation statement. Then we also talked about the need. Why do we need to prepare the B.R.S? And finally, the most important, we talked about the various reasons for the difference in the balance of cash book. Only when we know the reasons for the difference, only then we will be able to reconcile these differences. Unless and until we don't know the reasons, we will not be able to reconcile. We will be talking about the bank reconciliation statement, its preparation and presentation in the next video. I hope the concepts were clear to you. Thank you so much for listening to me so intently. If you have any questions, then you can write to me on my email ID mentioned here. Comments are also welcome. Please like, share and subscribe to my channel and encourage me to put more content for you all. So this is Inside Accountancy by Shakun signing off. Thank you so much.